Hey guys, hope you're well. So I'm just going to go over all the setups that took place last week, and hopefully we can obviously use this as a learning point moving forward. So starting from Monday, the 3rd of July, obviously on the Friday we'd seen that price had essentially delivered on an extensive run, and then we had a bullish reversal that took place on Friday. So from this point onwards, we can anticipate one of two things. We could either anticipate a bullish continuation to the upside, or we can anticipate a bearish reset, which would lead to obviously a bearish continuation. So if we go down to the 4-hour time frame now, just going to just zoom this in so you can see what price, where price was just before the London Open, right? We can see that price had already delivered two bullish expansions to the upside. So again, at this point in the 4-hour was giving us a bullish bias, and we could anticipate a further bullish continuation. Not only this, the next on buy side liquidity was the swing high right here, and the next on sell side liquidity is the swing low down here. Now, going down to the 1-hour time frame, again, just to forward play this before the European Open, we can see that price had delivered again on the 1-hour three bearish expansions, and then thereafter we'd seen two bullish expansions to the upside. So again, 4-hour bullish was the better direction, 1-hour bullish was the better direction. So on the daily, we can anticipate price could potentially give us a bullish continuation as opposed to a bearish reset. And this is how we sort of put these two things together. Now, the next drawn buy side on the 1-hour was this initial swing high, and the next drawn sell side is this initial swing low. So going down to the 15 minutes time frame, just to show you what kind of setup that presented itself, we can see the price, the European Open had given us a bearish break outside of this initial range. Now, what I'm going to do, I'm just going to highlight the fact that there was a bearish order block that was created just before the range break took place. And of course, this doesn't look like a very obvious bearish order block, but it is indeed a order block. So I'm just going to label this right there. Now, at this point onwards, obviously before the London session, we can see that price in the London Open had traded outside of the range. Now, for us to actually have a trade, we do need to see price interact with this bearish order block. So we can see that during the London session, price traded away from the Asian range as well as the order block for the duration of the trading day up until obviously our cutoff time for trading is sort of that 7 a.m. candle. Well, it's a 6 a.m. candle, and 6:30 is an extension. So even in that extended time, there wasn't any setup for us to engage in. So that was Monday's session for pound dollar. Now, going into Tuesday, so again, just going to just highlight Tuesday's session. We can see that again, the next draw on buy side stays the same, and the next draw on sell side also stays the same on Tuesday. Now, going down to the 4-hour time frame, we're just going to forward play this twice. And again, just to study the 4-hour time frame, we can see that price had delivered on two bullish expansions to the upside. The next draw on buy side liquidity is the swing high right here, and the next draw on sell side liquidity is the swing low down here. Okay. Now, going on to the 1-hour time frame, again, just before the London Open. So I'm just going to drag these along. Oops. There we go. All right, just to forward play that once, we can see that the next draw on buy side liquidity is the swing high, and the next draw on sell side liquidity is the swing low down here. Now, we can also see the price had delivered two bullish expansions to the upside. We can see that price has been giving us this sort of bearish contraction into this imbalance, which of course is an area of buy side liquidity pool. So again, bullish is the better direction, and we're simply going to be looking for an opportunity to engage in a bullish setup. Now, just before the London Open, we can see that price had given us a bullish break outside of the range. So this is the low of the range. We can see the price obviously vectored outside of that range. And of course, our AOI is going to be this bullish order block right here. So at this point, again, for us to have a trade opportunity, what we want to see is for price to trade into that bullish order block. And then from the bullish order block, we're then going to be looking for a 1-minute confirmation to go long. So we can see that when price traded into the bullish order block right here, we can see price deliver this initial low, lower low, and then gave a break of market structure right here. So again, I'm just going to just take this back to the exact moment the price broke structure. Right, so not on this candle, but the next candle was our break of market structure. Right there. There we go. So at this point onwards, of course, our interest is to get in at the breakout. So a classical textbook entry would be a breakout retest. So in this case, of course, we want to evaluate that our stop loss should go 5 pips below the recent low. There we go. And then long opportunity at the midpoint of the breakout. Stop 5 pips below the recent low. And then, of course, our first profit target objective should be ideally the recent high. Now, of course, in a classical entry, you cannot get that entry at a recent high. So what I usually would do is I would play around with entering any point within the breakup, because again, if I enter in a textbook where I wouldn't get that 1 to 2, so either I don't place a trade or I can get a better entry, which would give me a 1 to 2 R to R, which is the minimum R to R criteria for a trade. And then the second objective for me to take my profit, of course, would be the H4BST. There we go. So that's trade objective 1 and trade objective 2. Now we can see the price does trade in to trigger that opportunity. And I'm just going to go back to the 5 minutes time frame, which moves a lot faster. And then we can see the price hangs around the order block for some time before eventually taking out the recent high, which is our first profit objective, and then eventually trade into the H4BST, which is our secondary profit objective. So we can see that this opportunity produces obviously a very positive trade objective for us in terms of a BRC. So that was on Tuesday. Okay, so Tuesday was a BRC in line with our bullish bias. We're obviously anticipating price to trade back to this recent high. Now let's go into the next trading session, which was on Wednesday. So Wednesday, we can see that again, the daily BST and the daily SST still remains the same. So going down to the 4-hour time frame, again, just to move this forward, we can see that just before the European Open, right, price had delivered on 2 bullish expansion. Price still remains that second expansive range, so it still remains within this general range. So the bias is still 2 bullish expansion to the upside. We can also see the next draw on buy side is the swing high right here, and the next draw on sell side is the swing low down here. I'm going down to the 1-hour time frame, so I'm just going to drag these along. We can see the price had delivered on 2 bullish expansions to the upside, with the next draw on buy side liquidity being the swing high, and the next draw on sell side liquidity being the swing low. Again, so bullish is still the better direction because price closed back into that initial range. So we're still essentially looking for long opportunities. So now looking at this, we can see that price obviously our defined range obviously is point A, B, C. We can see that price has given us a bullish break outside of this range. So bullish is the best direction. So this is obviously a purge scenario, bullish purge scenario, but we still need to wait for price to take out at least one of our liquidity targets. So we can see London Open, price trades into the H1 BST, right? And then trades down back towards this initial low in Asia. So just Control Z. There we go. Sorry about that. Just keep moving the vertical line. And then eventually, like just so essentially price takes out the low of Asia, right? Which would have been an opportunity to have gone long. But the only confirmation that we would have needed was again for price to have purged the H1 BST, which didn't happen. And then obviously price came back down towards the low of Asia after taking out the H1 BST. Because optimally for me in this situation, what I would like to see is for price to at least take out the H1 SST as well as the low of the Asian range. And then I would have been looking for an opportunity to have gone long. But that doesn't happen. So we can see that price, after taking out the H1 BST, trades back into the range and then accumulates for a bit before eventually giving that bullish run in the New York session. So again, on on Wednesday, there wasn't any setup on GU that would have been in line with a purge reversal bias, which is obviously what we initially had at the start of the session. So now going into Thursday's trading session. So first, I mean, we've seen on the daily again that price had delivered on an initial bullish expansion right there. So again, we're still within this initial trading range on the daily time frame. Now we do have a new draw on buy side, which is of course the swing high right here, and the draw on sell side still stays the same. And going down to the 4-hour time frame, so we're just going to forward play this into just before the European Open. We can see quite clearly that price had delivered a draw on sell side liquidity, which is the swing low down here, and the next draw on buy side, which is the swing high right here. We can also see that the previous trading session had pretty much accumulated within this range. So this is still that second bullish expansive range. So bullish is still the better direction until price obviously breaks trades and closes outside of the initial trading range. Now, on the 15 minutes time frame, so I'm just going to drag along our times. So let's see, so just the European session at 2 and the London session at 3, right there. There we go. And then just to forward play this just before the European Open, we can see the price is still within our initial Asian range. And then what happens is just before the London Open, we can see the price had given us a bullish break outside of that range, because again, we had a bullish break and then these two candles, obviously this one didn't close, this one did close, but this doesn't form any discernible trap pattern. So in this case, for me personally, the better direction, because long is the better direction on the H1 and long is the better direction on the 4-hour. So essentially what we're looking to trade in line with is a bullish bias. So therefore, the best trade to have taken would have been a purge, would have been a BRC from the bullish order block. So this is how it works. So we can see that obviously price would have initially delivered on this initial high, right? And it contracted, right? And then obviously this would have been where we would have been looking for a break of market structure, but what we've been looking for is an imbalance. So price gave us a secondary break of market structure right there. So it's BMS. Secondary break of market structure. Stop loss goes 5 pips below the low. There we go. And then obviously what we're looking to do is to go long from this imbalance. Anywhere within this imbalance would do. Stop loss 5 pips below the low. And then of course you could just, the classical entry style would be to enter at the opening of the imbalance. Now, the first profit target ideally should be obviously the recent high, but obviously where one cannot get a 122 to the recent high, what one could do is one could adjust the entry within that imbalance to ensure that they could get a 122 there. And again, if price doesn't trigger, then you don't have a valid setup anyways. It's important that you do get that 122 to the recent high if you can. And then of course, your second profit target should be the H4 BST right there, which is obviously where a high of the range is, or you could even aim for the daily BST. So let's see how this trade will have taken place. So after giving that break of market structure, price essentially runs up, doesn't really trigger us in, right? It takes out the recent high, right? And then accumulates for a bit before dropping back down. So this second leg trading back into this range would have definitely triggered that entry. And then eventually price obviously made a run with hitting that first profit target at the H4 BST, as well as the recent high. So both targets would have been hit, and obviously price eventually traded towards the daily BST as well. If you decided to hold your position to that daily target, you could have gotten in 124 to that. But that was the most optimal setup anyways on Thursday, was a BRC in line with the H1 and the H4 bullish cycle. Now going into Friday. All right, so going into Friday, we've seen the price has taken out the daily buy-side target. So now the new drawn buy-side liquidity would obviously be the swing high right here. we can obviously see that price had still, like the daily SST is essentially still the same. So like saying there's nothing to move, we can see that price has now delivered a second bullish session of rise. So at this point, we can anticipate one of two things. We can either anticipate price to give us a bullish continuation to give us that third session of rise, or we could get a potential bearish reset to the downside. So now going on to the 4-hour time frame. Okay, so just going to forward play this. There we go. We can see that just before the London Open, next drawn buy side liquidity is the swing high, and the next drawn sell side liquidity is the swing low down here. Okay, and then going down to and again on the 4-hour time frame, we can see that price had given us 3 clear bullish expansions to the upside. So we have number 1, number 2, and number 3. But it's also important to note that after this third bullish expansion, price gave a bearish reversal back down. So price essentially came back down, took out this short-term low. So one could interpret this as one of two things: either a break of market structure to the downside in the beginning of a bearish cycle, or a reversal that could lead to a bullish continuation. Now on the 1-hour time frame, so we can see that price had delivered 3 bullish expansions again. So I'm just going to forward play this to just before the European Open. There we go. Right, so we can see that price had delivered 3 expansions and then immediately gave a aggressive reversal back and took out these short-term lows. And then afterwards, what did price do? Price traded back into the range. So again, you can interpret this as a initial bearish expansion to the downside, or considering the unmitigated zone, you can interpret this being the beginning of a potential bullish reset. Now, just before the London Open, we can see the price created this imbalance, which is the next on sell side, and we have this imbalance, which is the next on buy side. So we're either going to be looking to trade long in line with the daily bias, which obviously we're anticipating that third bullish expansion, or we're going to be looking to trade a short in line with a potential reversal. So let's see what kind of setup presented itself to us on this day. So we have we have a Asian range, point A, point B, and point C. We can see now that price is obviously trapping around the Asian range just before the London Open. So we don't really have any sort of a break scenario until just towards the end of our trading session. So I believe it was around 6 p.m. that price finally gives us a bullish break, right? So 5:45 candle closes, and then the 6 a.m. candle closes outside of the Asian range, giving us a bullish break. So what we can entertain at this point is a very possible BRC scenario. So obviously we have our bullish order block. And now what we're interested in is for price to do what? For price to trade into that bullish order block and give us a 1-minute confirmation to go long. So we can see price trades very firmly into the bullish order block. And after trading into the bullish order block, what do we get? We get a break of market structure right here. So this is a secondary break of market structure. Easy to miss if you're not paying attention. So it's always important to pay attention when you're trading. Secondary break of market structure, stop loss goes 5 pips below the low. There we go. And then entry at the imbalance. And then, of course, your first profit target objective should be where? The H1 imbalance, which is just above. And then I believe the second profit target, because of course we're anticipating that third bullish expansion, which is the most aggressive part of the cycle, we could aim for that H4 BST. There we go. So decent risk to reward on this potential opportunity. We can see that price, after giving a break of market structure, trades into that imbalance and it begins to rally, trading into our first target at the imbalance. And then eventually, price trades into our secondary targets. So around NFP price, we can see NFP push price into that secondary target at the H4 BST. Okay, so this is another opportunity that took place to us on Friday. And this is an example of how obviously red news can help us with our trades if we're already in that position and price is already away from our entry point. So if price is, for example, very close to our entry before NFP, of course, the most reasonable thing to do will be to get out of the trade. But where price is already in the position and away from our entry price before the NFP release, obviously holding that position allowed us to capitalize off that bullish move into the H4 BST. So that was a trading session on Friday, which was a BRC. So we can see that on this trading week, we had quite a few BRCs, with obviously one taking place on Thursday, one taking place on Friday, and we obviously had on the Monday session another PRC as well. So that sums up my overview for this week, and I hope obviously you can look back on this week and take a few lessons from obviously what you did and what you could have done, and use this to improve on your application of this method in the coming weeks ahead. So except from that, wishing you all a fantastic trading week ahead, and all the best.